Greetings and welcome to the Running Trader. Okay, so this video is all about traders' bias and reliance solely on one indicator. So here on the screen is the chart of the pound against US dollar, 5-minute candlestick chart. Line at top shows the yearly high. And this is on Thursday. So on Thursday I didn't trade because I was working. But as you can see, the pound against US dollar, it had broken the yearly high. And this was primarily after Labour winning the UK general election and the pound soared against the US dollar. But as you can see on Thursday, it started coming down. I say I didn't trade Thursday because I was working, but it'd been coming down, okay? But I did trade on Friday. And this is where my bias came in because I was looking at the last low, which was a week ago. And for some reason I had in my mind, well, it's not going to hit this low. Another thing I was looking at, and this is what I was primarily working on, which, as I say, London breakout strategy is such a simple system. Basically, as it says, it's breakout the London session. So simply what you do is, on the 5-minute candlestick chart, some traders use different time frames, but I use a 5-minute candlestick chart. This box here represents the high and the low of the Asian session, which in the UK is from midnight to 8 o'clock in the morning. If it breaks out the top, you buy. If it breaks out the bottom, you sell. Simple as that. But you can overcomplicate it, and this is what I did on this particular trade. So my bias was very much towards the client sentiment, because the client sentiment was 64% short. Now, it's a well-known fact that most traders lose money, so I take the contrarian opinion of going the opposite side of that. So I was relying too much on this client sentiment on this 5-minute chart on the London breakout strategy. So I was thinking, there's no way it's going to go down, but of course it did. And look, this is the line of the low here, which was a week ago, and I should have sold here. You see here, because I said to myself in my mind, in fact, it was ranging very much for an hour and a half here, and it had just broken out, so I should really have sold it there. But then I had in my mind just to make doubly sure, because I still had in my mind convinced that there's no way it's going to break the weekly low. But then, of course, it did. So I should have sold here. And I said to myself in my mind, I said, well, when it breaks there, I am going to sell. But then I didn't. I didn't have faith in the system. And what happened was, well, I always aim for about 20 pips with a trailing stop of 15, so 1.5 return. And I set it and leave it because you never watch these trades, especially on London breakout strategy, a 5-minute chart, because, you know, the price can bounce up and down and you don't want your emotions to get involved. But there was a possible 20 pips here, just depending where I got in. So for example, if we're looking there, just about there, we're looking at maybe 920, and it was say up there 901.7. But then if I'd gone up the top here, which is technically where you should have done, then yes, I would definitely have got the 20 pips. But at the same time, I did miss a bullet, because sometimes I trade the Euro US. You can trade the Euro US as well for the London breakout strategy, and the Euro US and the pound US are correlated pairs, which they move in the same direction, but not necessarily at the same speed. So if we have a look at the Euro US, and I was tempted to trade the Euro US because that was my last winning trade this week. And as you can see, it follows very much. It's been coming down from a very much a high, because obviously when the pound went up, the euro went up against the US dollar. But the last low was approximately about a week ago, the same as the pound. And here we are. We've got the Asian session here. And yet again, I had this bias because the client sentiment was exactly the same as the pound against the US. It was about 64, 67% short. So I was determined it was going to go up, and I had this fixed mindset. And as you can see, it stays in the little range here. But however, I was lucky I didn't trade this, because even though they're correlated pairs, they don't necessarily trade exactly the same. And here's the thing, if I'd sold there, only went down a couple of pips, and then it's gone back up, and I would have lost. And this is the support line here. As you can see, the price hasn't quite hit there, and it's hit there, and at the end of Friday it's gone back up again. So we have this support. It's met its support there, but as you can see, compared to the pound US, it's hardly moved out the range. Now I could quite easily have gone for the Euro US. Now what makes my mind up between going with the pound US or the Euro US? On recency bias, I would probably have gone for the Euro US, primarily because I won last time on the Euro US. But you know, the market doesn't know that. The market doesn't care. Um, you know, and just because we had this you know weekly low, doesn't mean that it's not necessarily not gonna break through it. Because I was, you know, I've said to myself on previous video clips, you know, when it breaks through uh, this support, then that support then becomes possible resistance, you know, and the market isn't going to follow your system. The market isn't suddenly going to say, well, I can't go below there because that low was a week ago. Why shouldn't it break the week's low? And I guess it's a bit the same with the client sentiment. Yes, we know most traders lose money, but this is 64%, this 5-minute chart. In that small period of time, you know, it doesn't mean that the price isn't going to go down for a little period of time. And as you can see, it's come back up at the end of the day. It's gone a bit higher than the Euro US. So I can look at the glass half full or the glass half empty. I missed the possible, obviously the possible Euro US of actually taking the trade and then losing. So I'm happy about that. However, if we go back to the pound US, I am annoyed about the pound US because, I mean, it was close. I might not have got the 20 pips depending where I went in, and obviously there's the spread to pay as well, which is about a pip spread. So at the end of the day, I'm not too worried. Also, what was coming into mind was the fact that it's a Friday. A lot of traders also don't trade on the Friday. Traders are heading off for the weekend, so it can be a bit unreliable. Because I hadn't traded on Thursday because I was working, I traded on the Friday. But also coming into my mind was the fact that, well, basically several things. I was relying too much on client sentiment. The fact that so many people were short, I thought, well, it's not going to come back down again. I was also relying too much on the fact that this low here, this last low was a week ago, so surely it's not going to break that. The pound's been doing so well. Combine that last week low was a week ago, and most people were short. Then I'm thinking it was bound to go up. I didn't have faith in my system. I was very fearful, and that's the two sides of the market. You've got greed and fear. And also another thing that was weighing on my mind, this is very much fearful again. My last winning trade was Euro US, so I'm lucky I didn't trade that. I'm also up just over 10% for the month. So here I am thinking, oh, I'm going to try and hoard my gains. But that's not the way to think when you're trading. The way to think you're trading is because, with those 15 pips, it's just a small percentage of my account, and it swings and roundabouts, You're going to always have losers. You're going to lose some, you're going to win some, And currently for the month, I think I'm about on a 67% win rate, which is good. And I've made money, so I'm just over 10% for the month. So why was I being fearful? I'm just over 10% for the month. I could prepare to lose that. But this is what I say about mindset. Trading is all about mindset. And it's such a simple system. And people say, well, how can it work? Well, it does work. But what causes the problems is up here, is the mind, how you were thinking. I was thinking too much about the client sentiment. I was thinking too much about the low. So much other stuff was coming into my mind instead of just sticking with the basic system. And I possibly could have got 20 pips. Who knows? It might not quite have been. But I missed, obviously the bullet on the Euro US because I could have traded that and lost. So in some ways, I'm happy because, it's a winning week for me. I'm just up over 10% for the month. I missed out on losing the Euro US. Okay, possible pound US, possible winning trade. As I say, up over 10% for the month, 67% strike rate for this month, winning week, and we live to fight another day. So at the end of the day, it's not all too bad, but I just thought I'd show you this because there is this trader's bias and trader's recency to trade with what last one, to solely rely on one indicator. You've got thoughts running through your head. I'm trying to protect what I have earned this week or earned this month. I'm relying on that indicator. I'm solely going to go with that indicator instead of looking at the whole picture and also having faith in your system. I've traded London breakout strategy many times. It's one of my favorite strategies. Simple strategy. I've done many other videos on it. So if you want to see other videos of how I do winning trades with it, and obviously they don't always win, but say 67% strike rate at the moment for this month and just up over 10%. So if you want to see other videos of me trading London breakout strategy, then subscribe to the Running Trader, and you'll see many more, and certainly more in the future videos of how I trade the London breakout strategy. So I'll see you there over at the Running Trader, and have a good weekend. See you soon.